welcome to another broadcast of Venture Capital Fund. In the event that you're joining me for the first time, do permit me to introduce myself. My name is Gary Thompson. I'm a business development consultant by profession. I'm a humanitarian by nature, and I'm the multiple best-selling author for several books, including Billionaire Codes and Manager's Toolkit. Today, I want us to embark on an exercise, and that is to examine the stock exchange market. So, we're going to call today's topic Stock Exchange Market Investment Masterclass. We have certainly designed a masterclass that really helps you to take a deep dive into the belly of the stock exchange market. So at the end of the day, you have a better working knowledge of how to invest in the financial market. In today's program, we will examine things that you should know about the SEC, or if you're in Guyana, the GSC. We will examine things that you should know about the composition of the financial market. We will also examine things that you should know about sales traders, execution traders, and market makers. Along with this, there are things that you should know about structures and about quant. Last but not least, we will examine what you should know about active and passive investment within the stock exchange market. But just before we embark on today's program, do permit me to tell you a little about the vision behind Global Branding and Marketing, and now, most recently registered company that we call Global Capital Inc. Now, our mission is to position our clients, employees, and strategic partners to understand, create, and leverage passive income cash flow, build multiple streams of income, leverage smart investment strategies in order to build generational and intergenerational wealth. In our programs that we will train you, mentor, coach you on, you will learn about financial intelligence and the commercial financial sector, financial intelligence and the investment financial sector, financial intelligence and smart capital market. Last but not least, you will learn about financial intelligence for a sustainable livelihood. This program is for business leaders and anyone who wants to achieve more financially. It's important for you to also understand that financial intelligence goes beyond your ability to make money and maximize your disposable income. It addresses the issue of understanding the global financial systems and leveraging this intelligence to create good debt cash flow, minimize existing debt financial portfolios while maximizing financial and equity capital gain. The understanding of the commercial financial sector, the investment financial sector, and smart capital markets are an important body of knowledge for you to have in the global landscape of financial intelligence. I want to welcome you once again. If you're looking at Venture Capital Fund for the first time, welcome. And do remember to give us a like, do subscribe to the program, and do share this program within your network. Today, we're going to be talking about the stock exchange market. But just let me give you a little historical perspective on the stock exchange market. The New York Stock Exchange market was first registered on the 17th of May, 1792. And that's something for you to understand in history. So that means that the New York Stock Exchange market has been in existence for over 228 years. That's a long time. Many developing economies are catching up. They have a far way to go. And many developing economies are still way behind time when it comes to developing a robust financial sector. In the United States of America also, the SEC, which is better known as the Security Exchange Commission, that was established in 1934, and that was established during a crisis within that country. And one of the reasons it was established was mainly to promote confidence and trust in the financial market. And from then to now, I guess they have done a tremendous job in that regard. So I just want to at least get these points out of the way. Now, at Global Branding and Marketing and Global Capital Inc., we have designed a very unique program that we title Investing in the Stock Exchange Market, or Stock Exchange Market Investment Masterclass. And there are some essential things for you to understand when you're attempting to invest in the stock exchange market. I say this against the backdrop that in recent times in the Caribbean and Guyana specifically, we have heard of a so-called investor who was able to fleece over $20 billion out of local investors. From the research that we are doing, this is what was clearly established, that most of those investors, if not all, they made an emotional decision when they were investing their hard-earned capital. And it's important for you to recognize that emotions has no place in financial investment, because emotions without the facts can lead you down a rabbit hole where at the end of the day, you experience tremendous regret and tremendous hurt. And that's not something that you want to experience. So it's very important for you to get the emotions out of investment. The other thing that we have recognized is that many persons who would have invested at that particular time with those particular individual, they were very speculative. Again, speculation is like a gamble. And when it comes to your money, that's not something that you want to do. You don't want to take your salary and go to a casino and gamble it all away on a speculation, on a hunch, on a guess. When you select investment portfolio or you work with parties without having all the facts, it's very much like taking your salary with your bonus and the year bonus, and you put it all on a bet in a casino. That's not what you want to do. Get the speculation out of investment. Now, it's important for you to recognize why I'm saying all of this, because it is this speculation that leads to depression. At the end of the day, when you do not get the results that you're looking for, it leads to depression because you have been deceived. And you're being deceived, you're being in depression because of the fact that you're making emotional decisions, speculative decisions, and that's something that you don't need. Now, remember this, there are a lot of Ponzi schemers who are out there, and they understand your emotions. They understand your craving and desire to cash flow maximize, and they will certainly leverage your desire to attain wealth against you by professing to have knowledge about how to help you cash flow maximize. And again, that happens because you do not have enough skin in the game. Now, on the flip side of investment, what I'm about to say is what you should know. So I'll go through this and then I'll talk a lot about things you should know about the stock exchange market and how to invest there. Now, real investors take the time to become market sensitive and market oriented. They become market sensitive and market oriented by doing what we call market analytics. Now, what exactly is market analytics? Market analytics is when you can go to the back end of the investment portfolio, and there's a front end and a back end. You need to understand this. At the back end of the investment portfolio, you can look at historical data. You can look at track record of the companies and the portfolio that you intend to invest in. And that is regardless if you are investing in a single company or if you're investing in an index fund which carries multiple corporate portfolios. Getting to the back end is absolutely necessary. Now, two things here is either you as an independent investor go to the back end, get the historical data, and that allows you to make informed and educated decisions, or you get your PFA, professional financial advisor, personal financial advisor, to get that kind of information for you that you can now use to make an informed and educated decision as to whether you should or should not invest in the particular portfolio. Information is power. Information is key. Information is gospel in the financial world of investment. And you need to ensure that you get this information, or your, again, professional financial advisor give you these forms of investment. Now, working with a merchant bank is not necessarily going to get you the information. They may get you access to the market, not necessarily the historical data pertinent to the market that you want to invest in. All right, we'll talk a little bit about how to do this better. But we're coming now to the back end. Why do you want to do the market analytics? Because doing the market analytics also allows you to understand what is the growth projection of the company or companies that you intend to invest in. And this is something that you need to know. All right, every activity that is happening at the front end. So when you look at the candlesticks and you're looking at black screen and colored dots, I call it that. There is something at the back end that is causing that black screen to light up. And smart investors take the time to understand what is causing it to light up. All right. So going to the back end and really doing your market analytics, doing your portfolio analysis will help you to understand what are the growth plans of the particular portfolio that you're invested in. What is the scalability potential of that particular portfolio that you intend to invest in? And that allows you to get informed and educated decision about what you're going to do. The next thing that I want to suggest that you should pay attention to is what we're going to call team dynamics within the portfolio that you're going to invest in. Now, companies just don't pay dividends out like that. They're forces. They're market forces, they're human forces, they're technical forces that are behind the company's ability to pay out dividends. And it's important for you to understand this when you're making an investment decision. If you don't know it, you should be working with a PFA that is helping you to understand all of this, so you can make an informed and educated decision about how to invest your hard-earned dollars. Outside of this, you're going to be speculative. Outside of this, you're going to be very emotional. Outside of this, you're going to be setting up yourself to be hurt and exploited. And you're going to make Ponzi schemers become more happier and excited about your inability to read them like a book. So I trust that you understand the approach, how you go about making your decision to invest on the international stock exchange market or the local stock exchange market. Now, I mentioned early on that there are things that you should know about the SEC, which is the Security Exchange Commission, and the GSE, which is Guyana's Securities Council. Now, without getting into all of the technical things that you should know about these institutions, what I want to first of all establish is that these bodies are established, first of all, has a regulatory and enforcement body. The SEC of the United States of America, they are strong enough to investigate civil and criminal violation of any security laws. So this in itself gives the investors the protection that they need against Ponzi schemers. And it's important for you to know this. This is what gives you the security. And this is something that I need to emphasize, because while we're seeing across the Caribbean and some parts of the developed world, the Ponzi schemes do happen. I don't want you to be fearful of investing, because it is a smart way in which you can build wealth, generational wealth and intergenerational wealth. This is the platform that businesses use to gain equity capital. This is a platform that government use when they're issuing treasury bonds. And it has tremendous opportunities for you to cash flow maximize. The key is you taking the time to understand the market, and you working with a professional financial advisor or your personal financial advisor that can navigate you through these terrains. So I'm not going to get into the nitty-gritty of the Security Exchange Commission, but I'm going to simply say this: they're set up to carry out 4 essential functions, and it's important for you to understand that. When you come into our masterclass that we are going to be providing, and to corporate clients, and many of them are going to be free programs. The introductory programs are going to be free. We will go into all of these details with you so you understand what are those protection mechanisms out there, and how you need to access those information and leverage those information to hedge any risk in the market. Now, it's also important for you to know there are things you should know about the composition of the financial market. The financial market is mainly broken up into about 3 main parts. You have what is known as the commercial financial sector that helps you to create debt capital. And you have the investment financial sector that helps you to create what is better known as equity capital. We talked briefly about them just now. But what you also have is smart capital. And the difference between them is almost like night and day. For example, when you try and successful in accessing the commercial financial sector, you're saddled for a period of time with interest and dividends. And it is something that you need to know. Even in financial intelligence term, in the Caribbean, they talk about accessing debt capital at high interest rate. And the interest rate is only high largely because of your inability to negotiate better interest rate. And this is something that can be negotiated with you and the bank. It is something that can be negotiated between you and your PFA, professional financial advisor, personal financial advisor, who will be able to leverage debt tools to help you to mitigate that high cost. In cases, the debt cost of about 10% per annum, 16% per annum, can perhaps come down to about 7-8% per annum in the hands of a skilled professional financial advisors. So we're going to talk a little bit more about this now, but it's important for you to understand this. And for the businessman, for the entrepreneur who's going to create debt, it's very important for you to understand how the commercial financial sector works and to understand what steps you can take to mitigate um, debt acquisition and to mitigate debt management. Absolutely necessary for you to understand this. The content that we are talking about, you find big agencies like the JP Morgan, the Goldman Sachs, the Blackstones, the Vista Capital Partner, the Bridgewater, just to name a few, who are actively involved in wealth management portfolios. They understand these systems. In Guyana, with the soon to launch Global Capital Inc., these are some of the portfolios that we are currently looking at. So that's just a little bit about the commercial financial sector. And these are portfolios that the public needs to understand, particularly when you are thinking about certain types of investment. Now, on the other hand, you have what is known as the investment financial sector. Now, the investment financial sector is very broad, and the investment financial sector is where you will find the Goldman Sachs, is where you will find the JP Morgan, is where you will find the Vesta Capital Partners, is where you will find the Blackstone and the Bridgewaters. They're actively in the investment financial sector. There's so much that you need to understand about the investment financial sector as you are positioning yourself to make investment into these markets. And again, I would normally say getting into these investment markets is like taking a deep dive into an ocean that perhaps you have to go very deep to find the bottom because it's very huge. And let me give you some quick example as to what I'm talking about. The investment financial sector allows you to make investments in what we call corporate financing. And in corporate financing is where you're likely to find IPOs, which is the initial public offers. You're also able to find private equity investment. And there's a difference between public financing and private financing. The public, those are the ones that are listed on the local stock exchange as an LLC or as a LTD. And on the other side, you have private companies which are not listed. And we'll get into all of that later on. But it's important for you to understand this, using everything that I've said earlier on. Doing the market analytics will allow you to understand which business portfolios that are listed that you should invest in. All right. Now, on the other hand, that is one, and there's a plethora of information for us to dive in there too. Again, when you come into our masterclass, we will work with you for you to understand this. And we'll talk a lot about how to safeguard your investments when you're going to these portfolios to invest. Along with this, the investment financial sector, there's markets that we would also call investment management. And under investment management is where you're going to find stocks, bonds, and mutual funds. Is where you're going to find hedge funds. Is where you're going to find index funds. Is where you're going to find Vanguard Index. Is where you're going to find ETF. And ETF meaning exchange trade funds. And this operates very much like an S&P 500, or it operates like a Vanguard Index or index fund. Those technical areas, when you come into the masterclass, we will help you to better understand it in order to put you in a position of strength to better navigate all that we are talking about here. And when you're going to make an investment in the local or international stock exchange market, these are essential information for you to know about the portfolios that you're going to be going to invest in. You owe it to yourself. or at least this much to ensure that you have a PFA, a professional financial advisor, a personal financial advisor, and that can really work with you to help you to make informed and educated decisions. Um, Along with this, as we talk about investment management and we talk about the international stock exchange market, you also need to understand what is the Montreal Bank. Understanding the history is going to help you to make informed decisions. The Bank of Nova Scotia, the Royal Bank of Canada, what all of these portfolios has to do with helping you to make an informed and educated decision. You need to understand it. If you don't understand it, again, your PFA needs to understand it. Now, so far we have talked about some of the mechanics in relation to investing or the portfolios, the structure, the portfolios in which you could invest in on the international stock exchange market. But it's important for you to also recognize that in making an investment decision, there is a human and technical resource behind those investment portfolio, or at least there should be. So that brings me to the other point that looks at trading and markets. Now, in trading and markets, you need to understand who are sales traders, what you should know about sales traders. You need to understand who are the execution traders. What are things that you should know about execution traders? There are things that you should know about market makers. What are those things that you should know about traders and market makers? There are things that you should know about structures and what you should know about structures. There are things that you should know about quant, and what are those things that you should know about quant. Now, everything that I've just talked about, those things are the things that literally determine your success, your failure as an investor, and in business. Those are tools. And I'm saying to you that you need to understand this. If you don't understand it, your PFA, your professional financial advisors, should be the one that is taking the time out to understand the dynamics of this market and ensuring that they can communicate those information to you and leverage those information to help you to make informed and educated business decision and investment decisions. Now, I'm going to just briefly look at the 5 headings we have just called, which is sales traders, execution traders, market makers, structures, and quant. Now, the sales trader is the one who is likely to make contact with you to provide you with information about investing in the local or international stock exchange market. And in most cases, they are targeting high net worth clients. They're the ones that are making contact with you, but they're not the ones who are placing the trade. The ones who are placing the trade are what we call the execution trader. Now, the execution trader is not supposed to be a person of average, meaning that they're the one that must understand the investment portfolios in making that trade for you, in making that investment for you. Now, in many cases, when you go to an agent, for the agent make that investment decision to you, particularly when you're dealing with Forex trading, in most cases, the agent just get a fee or get a commission for every purchase or trade that they make. That is very risky because many traders do not fully understand the products that they're trading in. And we'll talk briefly about commodity products. I'll see if I can fit that into today's discussion. If not, we'll identify another day to look at that. Now, you don't want to be making a bet. You don't want to be placing a bet with an agent that is not taking the time to understand the investment market, because they can be simply giving your investment away because they're speculating, they're guessing, and they simply don't care because you have to pay a fee or a commission every time you make an investment decision. Now, the execution trader is supposed to be the one that have knowledge in terms of what they're doing. And in the absence of having the knowledge, I want to say to any novice, do not buy individual stock if you're not informed enough about that stock. It is better for you to invest in a portfolio that gives you a spread. So for example, if you're investing $100, it might be a portfolio that has 100 companies or 200 companies. So you can spread it $1 to every company or $50 to every company. That minimizes your risk. Your PFA should be able to advise you on this process also. So we talk a little bit about the sales trader. We talk a little bit about the execution trader. There's market makers. But let me talk a little bit now about structures. In the investment market, there are what we call structures. And what are the specific roles of structures? They are the one that creates financial products. Financial products in the form of derivatives and securities. And they're the one who are not necessarily pricing them, they are creating them. Now, who prices this is what you call the quant. The quant is largely responsible for pricing financial products in the form of derivatives and securities. And how important is this bit of information for traders? Absolutely necessary. There are about 4 types of derivatives. It's an argument between 3 and 4 because they talk about forward, they talk about future, they talk about option and swap. Now, these are all portfolios that allows you to hedge your investment. And let me talk a little bit about hedging your investment. Let us suppose that you want to buy a particular stock and your PFA, they're able to negotiate what we call an option. What an option allows you to do is to buy a stock, let us say at the value of $100, but you want to buy 10,000 of that. The value of it today is $100 per stock. But because you might be uncertain about whether the market is going to become bullish or bearish, whether the price is going to go up or down, you want to hedge your risk. So instead of paying $100 multiplied by 10,000, you negotiated a derivative called option. And what that allows you to do is to pay a percentage of the cost of that stock. Might be 5%, 10%, might be even lower depending on how you negotiate. So you have options here. If the cost of the stock drops, you're able to forego it, give it up, and consider your loss 10% or 5% or less. It is far better than losing the entire sum on that particular stock that drops. If the stock price goes up, you have options again. You can find a buyer, sell it, because you're buying it at $100, perhaps you may be able to sell it at $110, $120, multiplied by the 10,000 figure. That's money to cash out. All right. So in this case, you hedge the risk and you minimize the chance of you being hurt as a personal investor or as an investor who's protecting the interests of your client. These are important information for you to have. This is not only related to, it's related to businesses across the board. A farmer who believes that the market price is going to drop can leverage these portfolios. Perhaps even in oil and gas, it can be leveraged. So I'm saying to you that getting into investment banking, getting into investment in the stock exchange market and so forth, it's not about the emotion. It's not about the speculation. It's largely about getting enough skin in the game to be able to do the market analytics, to be able to do the historical analysis, to be able to assess team dynamics, to be able to understand the tools that can be leveraged to mitigate risk. Now, derivatives are a hedge, or provides a hedge to businesses, and the biggest banks in the world uses that to hedge their risk. And it's important for you as an investor or working with your PFA to be aware of some of these tools that are available to you when you're getting into the investment market. Now, I do believe that today we looked at a number of issues, and the last thing that I want to look at is what you should know about active and passive investment. You want to be an investor, you can be an active investor or a passive investor. And I want to emphasize here a whole lot. In most cases, when you're being schemed because you've made a decision to become a passive investor. You don't want to make, you don't want the worries of, doing the analysis and checking daily financial reports and daily business activities, or to even understand what portfolio your so-called investors are invested in. You take a passive approach to investment. That can put you at some risk. Not that passive investment is bad, but if you're making this decision on your own and you don't have a professional financial advisor next to you, you don't have a personal financial advisor next to you, you might be opening up yourself to some risk, and that's not what you want to do. So my advice to you is to invest enough time to understand this, or to get a PFA that can work with you to really help you to understand how to navigate the world of investment banking. There is so much that I want to say, but I'm going to leave it for another program. But just to give you a little briefing, there is what we call commodity market trading. And it's important for you to understand this. Why is it important for you to understand? Because commodities where you're going to find perhaps some of the biggest portfolios to invest in. Now, when I talk of commodity trading, I'm talking about metal, precious metal, agriculture, and energy. In the field of metal, you have things like lead, copper, nickel, and aluminum. Why is this so important? And we have about 20 trillion and above US dollars that is traded here on an annual basis. Precious metal, you have silver, gold, platinum, and palladium. Again, you have over $20 trillion that is traded here on an annual basis. You need to know this. In agriculture, that represents cotton, coffee, beans, and cocoa. You have in excess of $11.1 trillion that is traded, and this is showing signs of increasing because of increased global population. Now in energy, which we call oil and gas, which is another commodity sector, you have a tremendous, perhaps this sector alone is much bigger than the entire three sector portfolios I've just talked about earlier on. And it's important as you start to think about investing in asset management, asset acquisition, asset leverage, to understand all of this. As I said, the investment world is very broad, and it is very wide, very deep, and there's endless opportunities for you to tap into these markets and make tremendous financial breakthrough for yourself with the keys information. You see, knowledge is power, but the application of that knowledge is where you can get your superpower. We are here at Global Branding and Marketing. We are here at Global Capital to provide you with the information. And over a period of time, we will be working with businesses and the individual who wants to achieve more financially to really show you how to navigate this platform. I trust that you would have enjoyed today's program. Be blessed. And remember, register today for our masterclass if you're in business and you want to know more about these systems that we're talking about. I want to encourage you to reach out to us. And a lot of our introductory programs, or all of our introductory programs, are going to be free. But I want to assure you that our programs will help you to cash flow maximize. Our program will help you to minimize your debt cost. Our programs will position you to build generational and intergenerational wealth, and so much more. So be blessed. We are in a period of COVID-19. I want to encourage you to continue to observe the COVID-19 protocols and continue to keep your workforce safe and your team safe, your family safe, and by extension, the community and the world safer. My name is Gary Thompson. I'm a business development consultant by profession. I'm a humanitarian by nature, and I'm the multiple best-selling author for several books, including Manager's Toolkit and Billionaire Quotes. Be blessed and see you on the other side. Take care.